Okay, Grand Rising. Good morning. Good morning. Good morning. Latecomers will be late. Latecomers will be late. Grand Rising. Good morning.
Grand Rising.
Yes. Big up man like Danny D. How's little man?
He's good, man. He's good.
Yeah.
Getting big. Such a character.
It's amazing. Danny D's a daddy. I love it. All right, let's go. Guys, good morning. We're going to get into it. We're going to look at our charts and we're going to try and see what trades there are available for us to take today. For those of you who are following us on YouTube, all the receipts are there. You can see our analysis. You can see our breakdown, things that we spoke about in the week, and we watch them playing out. We're able to either get into those trades or at least understand why things are happening to give us a better understanding of market structure, of price action, so that when we are trading in the markets, we know what we want to do, okay? That doesn't mean that every single trade we take is going to be profitable, all right? It means that we understand this language, all right? That is the charts, okay? So, when we look at, for example, let's go, we'll start off in GU. All right, we'll start off at GU and we'll have a look, okay? Now, in the GU analysis that we spoke about multiple times, okay? Let's zoom out. Let's start as though, should I wipe my chart? I'm gonna wipe my charts, okay? I'm gonna wipe my charts because as you've seen, this trading thing is about repetition, all right? It's about understanding what you're supposed to do and doing it every single time, like a machine, over and over again. If you believe that every time you come to the charts, you're supposed to be doing something new, like one day you're doing top-down analysis, another day you're doing bottom-up analysis. No, it doesn't work like that. Every single time you open up the charts, you're going to be doing your top-down analysis, all right? Recently, we've been stuck on this analogy, which I do love it, all right? I do think it's very, very relevant. So therefore, I'm going to pull it up. And I know you're thinking, I'm having deja vu. This happened yesterday, where we pulled up this same analogy, we pulled up this same image, and you'd be correct. We did. And we're going to do it the day after, and the day after, and the day after. You're going to keep kicking the wall, all right? You're going to keep kicking the wall. I don't know if you see them Kung Fu movies. Man wants to become a master, yeah? He's an apprentice, sends him outside and tells him to kick the tree. Just keep kicking the tree until I come back. And he doesn't even come back anytime soon. Yeah? Keep kicking the tree. Okay? And that's what comes with the repetition. That's what comes with Breakfast Club. And I'm telling you guys, first time, that it is absolutely priceless that you're able to have this opportunity to be able to be in a community and do it together every single morning, because life gets in the way. Take it from me. I shit you not. I have done a course, and the course was expensive. Yeah, very expensive. Yeah, so more than 20 no expensive. Yeah, and was it more than 20 no? Maybe more than 30 no. I can't remember. All right, and it was some time ago to learn futures and options. Okay. with a well-known, institution, and wasn't even well-known. Was it well-known? It was well-known, okay? But what happens is life gets in the way. After you do the course, even when you spend big money, life gets in the way. You don't wake up every single morning and look at the charts, all right? You don't wake up and have somebody else to turn around and hold you accountable. You don't wake up and learn something new. Life gets in the way. So this opportunity every single morning is priceless, that we keep kicking the tree until your shins bleed, yeah? Until you get to the point after you've kicked the tree to death, your shins get numb to the pain, yeah? You're kicking the tree just for fun. Whenever you get upset, you just walk past the tree, just kick it, all right? And this is where we're at right now with our trading. We're understanding how to look at market structure, how to look at price action, how to open up a chart and straight away be able to say, okay, this is what's going on, and therefore these are the decisions that I'm going to make. Have a look at this market structure, guys. We can see that GBP USD has been bearish, making lower lows and lower highs. All right, for the people that are at home, who are first, this is the first time that they've even, had a taste of trading. Someone's told you about Unity, someone's told you about the energy, the love. Someone's told you about the personal development that we are all on, trying to learn this skill, and you thought, let me check this out. Let me watch one of these videos. What's going on here? I've heard about this trading thing. I'm not too sure. It looks mad complicated. I don't have the time. Yeah, people tell me, I say, I don't have the time for that. We don't have the time for that, but you got the time to wake up from crack of dawn in the morning and go and work for somebody else for 12 hours or 8 hours and then come home and repeat. All right? So we have the time. We make time for the things that we find important, for our priorities. Hence the reason why I'm here every single morning. Whether you are here or not, I am here because I have seen this as a priority to learn and understand this skill so that I can teach my kids, so that they've got the options. If they want to work for somebody every single morning, yeah, or they want to do whatever, they can do that, but they can also know that by having this skill, they at least know how to invest, they know how to trade, and they understand, the financial markets of what's happening in the world, how money's moving around the world. Bearing in mind, we're all out here doing everything we can do to work for money. I think it's quite important that we try and have some sort of understanding of money and how it flows, not just how we obtain it by giving away our time. All right, so we can see here the money that this market is making lower lows, lower highs, lower lows, lower highs, lower lows, and we've come up to this point here making a lower high. Now, based upon what the market has been doing, it's possible that we might be seeing a lower low coming. It's possible. Yeah, just based upon what the market has been doing. We're at the top of a range. Now, at the top of any range, we understand that from the top of that range, we are interested in selling because we speak about this area as a premium. Yeah. And at the bottom of the range, we are interested in buying because we see that as cheap, wholesale. This isn't just the case with our markets. This is the case anywhere in life. Okay, we don't want to buy at the most expensive something's ever been. We would like to buy when, look at that discount. Wow, just gone into Lidl and last week it was this price, now it's that price. Okay, let me buy 10 of them. That's what happens, right? Am I wrong? I'm sure that's what happens. You don't go into Lidl and be like, oh my gosh, last week it was £1. This week they're £5. Let me buy 300 of them. You don't. You're just like, wow, it's expensive. I don't want none of those today. Forget about that. I'm going to wait till they get cheaper. I know my mum be on some, Costco. Costco says that this is happening or this. My mum be coming back from Costco with stuff she don't need on the basis that she thought it was cheap. Okay, so have a look. Lower lows, lower highs, a bearish market. But we can see here from August 2022, the market was bullish, making higher highs, higher lows, higher highs, higher lows. This is called a retracement. Because we understand that these markets move in waves. Yeah, that's what we understand. So therefore, we would identify this push up here as a retracement. Okay. Now we can see the market came all the way up to the back of our range into this premium area. And then we can see how market structure, even though on the weekly, you can still see on the weekly because our strategy is, have a look, it's fractal. Meaning that it's the Russian doll theory. This is something that I have come up with, something that I visually think to myself, it helps explain what's going on. What's going on is that all of these smaller time frames fit into the one above, fit into this, they fit into this structure. So it makes sense for us to understand, first and foremost with my annotation tool, to understand this bigger structure over here. Yeah, it makes sense for us to understand this bigger structure. Because then if we saw the market coming up to this bigger structure, we think to ourselves, oh, that's the structure. That's the container. All right? And then we're thinking to ourselves, okay, maybe we're going to have a reaction from that structure. And if we're on a smaller time frame here and we're this guy over here, you know, we're looking at, okay, I'm working within this structure. And this guy's working within this structure. And this guy's working within this structure. And so on and so forth. So when you're here on your 1 minute time frame, your 1 minute entry, do not think to yourself that your 1 minute entry is going to just start busting through 1 hour structure with no issues. Yeah, or your 1 minute structure that you was able to get in there, placing your stop above that. That's not how you can't work like that. You have to look at it like this is, this is the setup. This is the setup. Now, I'm not saying you can't get a lovely entry on a bigger time frame. You can do. I'm not saying that. I'm just saying you must understand the structure. You understand? I can't get a big, massive. Let's imagine I've got these shapes here, these Russian dolls, and then my last shape is like this. Look, it's a pyramid. This pyramid goes nowhere. It doesn't do anything. It doesn't fit in this structure. I can't squeeze it into this doll. The base is too big. I can't squeeze it into this doll over here. It's too tall. Yeah? So it just means that we must understand our structure. Hence the reason why I started this session and I'm on the weekly. I'm not zooming straight into the 5 minute time frame. I want to know what's going on in that bigger structure. And I can see how this market came up here into this premium. And then boom, we had a reaction. Now, I'm not trying to say, because I don't know what the market's going to do. I don't know if right now the world's changed, it's crazy, some madness is going to happen. This market can decide to start doing this. Doing something that it hasn't done. Yeah, because it hasn't done that in regards to the trend since quake back over here in 2007. Hasn't started breaking outside of this trend. But it may do today. It may do tomorrow. I don't know. I don't know, crystal ball. But based upon what it has been doing, let me just lean on the information that I do know. I can't worry about the information that I don't know. If this starts breaking structure and doing something else, then I'll have to reassess. But at the moment, this is the trend that this market has been trading down within since 2006, 2007. So we've seen a break in structure. Boom. This is structure. Yeah? This is structure in here. We've seen a break of that structure of the market being very, very bearish, falling from our premium level. And after we've seen that, we understand the concept that we speak about, an indication, the market giving us some sort of indication of where it wants to go. Hi, Japes. I kind of feel like I want to go bearish by breaking the structure. But after we break that structure and we have that indication, we understand the market likes to correct. Okay, Jay, wait there. I'm just going to go back and go, let mum know that I'm leaving. Let mum know that I'm going, down south. Pause, yeah? And that the market would retrace, correct. And then afterwards, we see that the market likes to make a continuation. And then when it breaks the structure again, it does the same thing. That's an indication now. Then it corrects, then it continues. And then it breaks structure again underneath here, and it does the same thing over and over and over and over again. But it's about understanding the bigger picture structure so you understand where the ceilings are. Do you understand? You're not going to run. If we have said, come, let's have a race. We're going to have a race, and I started 3 meters away from a wall. Would you sprint headfirst into the wall? Of course not. We can't have a 100-meter race here in this location, in this direction, because there's a wall in front of us. Let's at least wait till, we see someone break through that wall or they remove that wall, then we can have a race in that direction. That's it. Same principle. So let's have a look here. Struck to our daily time frame. Now, every single one of these candles are a day in time. Now, I understand some more basics. I don't care what those other educators are doing, what they're saying. I understand this how I understand this. All right. If you want to understand it another way, by all means, go and, learn it another way, because it doesn't matter. Once you're winning and you learn it, that's fine. It's fine by me. I'm happy about that. And you may be able to come and teach me something that I don't know, something extra, some additional source. But let me tell you something. I want to keep this as simple and as funky as possible. I want to keep it funky. I want to understand what this thing's doing straight away without me, having to pull out all types of indicators, having to talk to you guys in a language that you do not resonate with, not communicating with you on the level that I'm supposed to communicate with you on in regards to letting you understand what the market structure is, what the price action is. I want to communicate this in a way that you understand it immediately. And this market only does one of three things, okay? It is bearish, okay? It is bullish, yeah? Or it goes sideways. I need to be able to identify all the time what is going on, when, and how I can take advantage of that. So say, for example, just a minute ago when we was on our weekly time frame, we was having a look, wasn't so obvious of what's going on right now. I mean, I can see it, but someone else might not be able to see how obvious what's going on right now, okay? But now I've zoomed in on my daily time frame, have a look, pow, I can see very clearly that this market was bearish. Have a look, boom, oops. Was bearish, like that, boom. Okay, and then the market did go sideways for a little while. Have a look, boom. All right, and give me a second. Let me open something up over here. Let's just do that real quick. All right, and then the market pushed over here, bullish, boom. Remember the market only does three things. So we've got bearish, we've got sideways in here. We've got a bullish action happening here. And then now we can see very clearly that this market has been going sidways. Sidways. Yeah? The market has been going sidways. You need to be able to make this so simple, so basic that you understand that. Now, yesterday we spoke and most people turned around and said that they understood that. 100% it was. It was 100% of people said that they understand that concept and be able to how they're able to open the market and be able to see what's going on. Well, I'm telling you something for free. You are 70% of the way. Don't believe the hype about this and that, the other. And you need to know about the algorithm and something else is happening. And when the stars align and the moon, crescents in a certain way, that this is no. Forget about it. You are 75% of the way. Yeah, in regards to understanding market structure, price action, technicals, and what you're supposed to do. I think there's another whole chapter in regards to risk management, psychology, etc. But on this chapter, you're good. All right. So right now we can see this market going sidways on a daily time frame, and we can even see a potential indication as this market broke outside of that sideways energy over here. You can even see a slight indication on the daily time frame of what might happen, of what it may want to do. But I don't get excited by just seeing the indication. I need to see a correction and then a continuation for me to get involved. It's just me. Like the break and retest traders, they see it break, they see it retest, and they just charge up and do a Hadouken and get straight involved. That's what they do. Well, I'm happy for them because sometimes when they hit the button over here and they go, oh yeah, look, we've hit the button, we broke, we retested, and they've hit the button at the end. Yeah, maybe. It's still a bit national lottery to me. It's still a bit gambly to me when you could simply wait. Because I asked the break and retest traders, I asked them this question. Have a look. Have a look at my argument. All right? The break and retest traders hit the button when this market comes back in here, for argument's sake. The question I say is, where's your stop loss? They're going to say they're going to place their stop loss above these highs. Maybe they're going to say that. Maybe they're going to say above these highs. Okay. I'm saying, well, you could just wait, get an extra confirmation, and you could take the trade probably for the same stop, oops, or less. Placing your stop above the last high, or less, depending on how you want to enter the trade. So I've got one more confirmation and I've potentially taken a trade with less risk. All right, let's go. So we're on a daily time frame and we're having a look. Now, if I don't know whether this is, this market's ready to go down here because it could be a liquidity grab. It could be, they call it a fake out. It could be this and that and the third. All right. Now I'm looking at some of the structure here and we can see some swing structure in here. Here we can see some swing structure in here also. Why did I draw my line like this yellow line? Because I wanted to touch the last high, which is just about touching in here. All right, the last low, sorry, before the highest point. This is the highest point. All right? This was the last low. If I was to scribble it in so you can actually see how it was moving like this from down here. Shaboinka, 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 shaboinka. That's how it was moving. And then it started to trade within that range. Let me get rid of this now. Within that range. Let me make this a bit better, like so. Between that low and that high, the market started to trade within that range. Okay? We saw some little wicks here on the daily time frame. I don't care about the wicks. Don't mean nothing to me. Let me see some closures. So when this wick came down here, I want to see a closure now below that wick. We've seen a closure, potential indication on a daily time frame. We've seen some sort of correction, pushing back up to 50% of this consolidation. And potentially, is this a continuation? Is this market going to do this and do this and do this and close outside of here? Well, I don't know. I do not know for sure, but I'm watching it. Let's drop it down to our 4-hour time frame. So in the 4 hour, we can now see some reasons, some deeper explanation of why this market pushed up into these levels. Can anybody tell me why possibly this market came back up in here? Does anybody can tell me why this market possibly came back up in these levels?
The imbalance.
To close some imbalances. I agree. Good morning, brother Alan. Yeah, the man, the myth, the legend. All right, here. And we can see a big imbalance over here also. Now, I've explained imbalances multiple times to you as inefficiencies. I've given you the supermarket analogy. I'm not going to give it again this morning. We did it yesterday. But the market doesn't like these imbalances. So here it gave participants in the market an opportunity to get in around about the 50% imbalance. Now, look, I'm still a bit concerned. All right? I'm a little bit concerned still. This market is cheeky, yo. This market might say, you know what? The managers had a little meeting and they said, yeah, well, we did give the participants an opportunity to get in and, close to where they wanted to get in. And the managers had a little meeting and, they said, you know what? No, I think we really need to give our customers, an opportunity to get in at the price that they really wanted. This market can come back up here and close this imbalance properly. Don't get twisted. Because we can see this huge imbalance in here. And then they can say, okay, now we've done we've met our obligations. And now let's go. Yeah, it could do that. And on a bigger time frame, thinking about our Russian doll, it would be an indication, a correction, not breaking the structure, and a continuation in our bigger picture. It would be. Okay, and it will be still something that we can turn around and go, okay, that still makes sense. At the moment, have a look. The market pushed in, closed this imbalance here with this first imbalance. So let's get rid of this. Gone. And it whipped into this larger imbalance here on a 4-hour time frame. So I'm going to put in here that it's a 4-hour imbalance. I know that there is somebody on this call that started a few weeks ago, yeah, and didn't overstand as much as they. Let me try and pick somebody out of here. Oh, Darren's been sending me some great messages, so I could pick Darren. Darren, I don't know if you can speak, Darren. I don't know if you are available to speak or not. I'm not sure if you are.
Can you hear me?
Darren. So I think Darren, if I remember correctly, came.
Can you hear me?
I can hear you, my bro. Can you hear me? I think Darren came and he was, he had dabbled in the trading space. Am I correct? Did you dabble?
Well, yeah, I was just looking out and seeing what everyone else is doing. To be honest with you, to get a wide view of everything that's going on in the trading space. I like to see what everyone's doing, So
since you've been here, Darren, have you picked up anything? Have you seen any improvements in your trading or anything like that?
To be honest with you, I haven't started trading or anything like that, man. I've just been watching you, and I think that watching you and seeing what you do is probably the best way to go about it, to be honest with you. I mean, I spent hours and hours with different mentors looking at what they're doing. And to be honest, your one simple, it looks consistent, and I'm going to go with you, to be honest with you.
I love that energy, because at the end of the day, it's like, I just want to know, because, you sent me some messages and some stuff that I've seen you picking up stuff and I've seen you getting it. And the fact that you haven't started actually trading, etc., is okay. All right. But what I want you to do, I do want you to open a demo account. So you're going to do that for me today. That's going to be your gift to me, is you're going to open a demo account today. Okay. Yeah. Just so that you've got one open, because what you don't want this to become, you don't want this to become just romance. Yeah. I want you to be able to say, you know what, I've got this little demo account, because even in getting a demo account, you got to know how to set it up. You got to download the app on your phone. You got to know how to take the trades on your phone. You got to download it on your MT5 if you've got a Mac or a Windows machine. I don't even know what's happening with Mac now in regards to MT5. I'm not sure. All right. So I want you to do that for me today. But I love the fact that you're here consistently and taking in the information. Let's go again. Jivan. I don't know if Jivan can speak. I don't know if he's available. I don't know if he's busy. I know certain man got toothbrush in their mouth. Or there. Jivan, is it possible? Can I grab you?
Yeah. What?
What? That's my energy. I want to hear you. What? Yeah. What? So from morning. So Jivan said to me the same thing. I think he was dabbling as well, Jivan, right? He was kind of new a little bit.
Yeah.
How has it been? You know what I mean, information wise, and what have you learned anything?
Like everyone's been saying over the last few lessons, I think the way you give it is definitely easier to digest, man. And just I think right now you could put it in a way where it's like we've gone through one chapter with like imbalances, liquidity grabs, you know, certain alphabet of what we're building right now, you know what I'm saying? So personally, I'm just learning the alphabet from you, and then I'll start putting my words together.
Oh, man's coming hitting me with a metaphors, yeah.
Analogies, you know what I'm saying?
Yeah. That's what it is, guys. You understand what I'm saying? Because it's like I don't know if anybody here speaks another language, because I don't. Yeah, you know, we all went to school when they tried to hit us with German and French for whatever reason. All right, and it's easy to someone that can speak the language, right? When someone's speaking French to you, they're speaking fluently. It's easy. They're saying to you, you know, this is a dog and this, that, and a third, and the basics. But if you don't know, you don't know. Yeah. And that process of learning a language, I'm comparing it directly to this. Do you get what I'm saying? Like, so therefore, being able to learn the alphabet, as Jivan said, and put his words together is what he's doing, is essential. It's essential if you want to know how to trade. If you don't want to know how to trade, and really what you're here for is that you want to make some quick money, I'm going to say to you, it's impossible. I'm just going to keep it short. Even if I started giving out signals, some people ask me to do, why don't I give out, I may have a signal group, give out signals and stuff like that, blah, blah. I hear you, but how does that help you? It doesn't really help you. Let's imagine that you catch a few trades and you make some money. All right, well, I'm the man. Jay's the man. Yeah, when he says that his signals have been hitting. All right, cool. What happens when they stop hitting? Because they're going to stop hitting. They're not going to be 100%. Do not get confused by the guys that are online like, we've got a 94% success rate. I mean, really? Really? Well, on the basis that is your stop 800 pips? Are we talking about one-to-ones? What are we talking about here? You've got 94% success rate. Why are you even on YouTube? Why don't you go to, Goldman Sachs and get all $4 trillion of their money and just go nuts? What happens when it stops hitting? So when it stops hitting, what we're trying to push into the psyche is that you're not gonna always hit. Not hitting is part of being in the ring. It's like, but the boxers, they're thinking they're never gonna get punched in the face. I mean, really? Because I've seen the best in the world get punched and nearly get knocked out, or the best in the world lose. So how is it that you are not gonna get punched in the face and not gonna lose because you've decided to be a boxer today? How is that possible? Just let me know. Statistically, it's not possible. It's impossible. So therefore, we need to turn and say, okay, cool. Let's build up the muscles in our neck so that we can take a punch. You ever see Mike Tyson? Let's go see Mike Tyson doing the neck exercises. You ready? Let's go find Mikey the Mike Tyson doing neck exercises. Why is Mike Tyson building the muscles in his neck? This is what I want to know. Mike Tyson's just going in here and, he's just knocking man out. Yeah? He's just going and knocking man out. Why is he here? Have a look. Let's pause it. Let's have a quick look. Why is Mikey the Mike Tyson doing this for hours? I don't know. I'm asking the question, why? Why is he building up his neck muscles? He's Mike Tyson. Because Mike Tyson knows, or his trainer, Cuss, knows that he needs a strong neck. Because when he catches a punch, because he will catch a punch, if he's got a little lollipop neck, his head's coming off. If he's got the lollipop stick neck, his head is coming off. So he says, you know what? Neck exercises gets him ready for the fact that if you're going to get in the ring, these are the things that are going to happen. If you're going to get into this trading market, you are going to lose trades. You're going to need to manage your risks. You're going to need to understand these things. And this is what we're doing on a daily basis. So let's have a look at this GU, as I was saying. All of this right now is a question that I'm asking myself is this, I'm concerned a bit at the moment of the fact that this market came here, indicated, potentially, corrected, potentially, but then didn't come back down and just break this level. It kind of did a little dance down here, hasn't broken this structure here, and danced back up in here. The question I'm asking myself very simply today is, are we breaking above this level, or are we breaking below this level? Simple question. Now, if we do break above this level up here, I'm not expecting it to come and break above this. I'm expecting to say, you know what, I actually did want to close this imbalance completely, and now I'm ready. If it does break above this, it's cool. It means it's doing something else. I'm not getting into this trade until I see this market either tap into this level here and then start breaking some lovely structure, making indications, corrections, and continuing over here after breaking outside of this structure. So maybe I might be able to get a trade in here on the basis that I'm at least going to get down to this level, but realistically, I should be going beyond there because I'm waiting for a lower low based upon this bigger structure. Or unless this market comes and closes below here, breaks some structure like this. And remember, I'm still on quite a large time frame, on 4-hour time frame. So that's what I'm looking at on a bigger picture. That's what I want to do. On a smaller picture, it's going to present different opportunities. On a smaller picture, this market comes all the way up here, and I drop my time frame down. I'm going to just show you in this drawing here. Is that up in here, then, and I start seeing the breaker structure in here, maybe an entry. But I'm going to be protecting my position and making sure that I'm profitable by the time it gets to this line here. And then when I see it breaking outside of there, indicating corrected, I'm still in the trade, fantastic. I'm going to be taking my trade down here, and I'm going to be looking at the structure every single time, understanding as the market comes down here and touches structure, we can have some reactions. And I'm going to be watching to see those reactions don't break structure against me, correct, and start continuing against me. But ultimately, if I'm lucky, the market will continue running all the way down to this lower structure, which is trying to break down, which is our bigger picture, correct continuation. And then it should go past this level. And I should be sending a message in the group saying, guys, that trade we spoke about, that was my entry. Yeah, really aggressive, maybe over the last low or even above this swing level over here. That was my entry, and it's gone to hell. That's my plan immediately, looking at this market. And I haven't even dropped my time frame down on 4-hour time frame. That's my overall potential plan. However, if something changes, just like if you planned to go to Stratford a certain way or go to South London a certain way and the Blackwall Tunnel's, closed, what are you going to do? You're going to go and drive behind the cones that are in the middle of the road at Blackwall Tunnel and just sit there? Or you're going to drive through them? Or are you going to say, you know what? My route has changed. Something's changed, and I've got to change what I'm going to do. I've got to change my route. I've got to change my ideas. I did think I was going to get there in 40 minutes, but now it's looking like an hour and a half. Furthermore, I've got to go, Dartford Tunnel. I've got to go in the opposite direction first before I can get back on the route. So for argument's sake, if I see this market come over here and start doing some other stuff and breaking structure up here and doing something else, well, I've got to go, whoa, let's go back to the drawing board. Let's wipe the charts, let's wipe the sheets of paper, and let's start again. Let's see what it's doing. But a lot of people don't do that, especially novice traders. They marry the trade. They say, you know what, it's going down. I know it's going down. How do you know? Tell me how you know. Tell me how you know what it's going to do. You don't know. You can read and react to what it does. And it just depends upon what time frame you're going to be reading and reacting. Are you going to be reading and reacting on a 4-hour time frame? Are you going to be reading and reacting to 1-hour candles? Are you going to be reading and reacting to 15-minute candles? That's the difference. But you're always reading and reacting. I'm going to say that again because I went over somebody's head. You are always reading and reacting to what the market does. Every single trader out here, the best traders in the world, are reading and reacting to what the market does. They haven't got no pre-written script, like they're, you know, like they can read the future. They are reading and reacting to what the market does. The only difference is maybe there's a big institution that's reading and reacting to monthly candles. Maybe there's some institution out there that are reading and reacting to, you know, 12-month candles on the basis that they're trying to take this trade and they're going to get out in 2042. I don't know. But you are always reading and reacting to what the market does. All right, so let's have a look. Let's zoom in now. Let's try and see if we can get even some more source. All right, because that was the opinions that I made based upon a 4-hour time frame. Now look, I'm on the hour now. Okay, so I'm on the hour time frame, and that my same concerns are there. Is this market going to close above this level or this? Let me put some lines in, because I know the guys at YouTube are like, "Rah, this guy's on a Crayola thing, just scribbling all over his charts." Right, no problem. I'll clean it up. I can do neat. All right, I can do neat. We get rid of all of these little squiggles there because you guys overstood my point, okay? And you don't need me to have those squiggles in no more. So my concerns are still, is this market going to close above here? Nice and neat. Make it yellow. Here you go. Dashed. Woo. Nice and clean. All right, let's go. Or is it going to be closing below this level? That's what I want to know. Now, we can see some reasons why this market maybe came up in here. What could be a possible reason? Obviously, we know that on a higher time frame, there is there's some bigger reason in here. I thought I put it in there, but let's draw it in. Yeah, there's still this imbalance that hasn't been filled. Okay, and I think if it's there, I think there's even a bigger reason than that. Am I getting confused? No, that's fine. All right. Yeah, so we can see a bigger reason, but can anybody see a smaller reason right now of maybe why this market came back up into here after breaking structure here, making lower lows, lower highs, lower lows? Can anybody see any reason of why maybe we came over here? Anyone see any reasons of why maybe we came there?
Well, I wanted to close 50% of that imbalance to the left.
Hey, I want to take that, G-Van. Come on. Come on. Alphabet man, all right? That it didn't only come in here and close 50%, but yeah, it closed it all, to be fair, of this smaller imbalance that was sitting in here. Have a look. If I was to rewind this chart like this, and G-Van was looking at it through his, you know, top student now, and he can see these things because of he's just shown me that he can see these things. He would have done this and gone, there's an imbalance over here, Jay, that, you know, though I don't know if the market's going to go and close it, there's a very high probability, because the market doesn't like inefficiencies, that the market might come and close that imbalance. And he would have marked that out. And then when he started seeing the market doing the hokey cokey, he'd be like, maybe it's going for that imbalance. Maybe, baby. So therefore, this 1 hour imbalance that was there has now been fully closed. Shut the door on it. Like you can't get any more accurate than that, to the millimeter where the candle's closed. Look, that candle closed there. The imbalance is there to the millimeter. It closed there. A little wick here, but it closed right on it. So that imbalance now, let's get rid of it. It's gone. It's not inefficient. That guy that was standing in the queue over here was like, oh man, I've only had £10 to spread on bread. Another market went in. He got his opportunity over here to buy at his price. This market is no longer inefficient. Yeah, he had to wait a little bit, which he was a bit annoyed about. But in the end, he got what he wanted over here, and those orders were able to be filled because price moved so quickly The market moves so quickly through these prices here. Can you see? Yeah, 26500, 26400. The market moves so quickly, zoop, through all of those prices. It had to give people an opportunity to get back in at those prices. You know, it happened so quick with us. Sorry, we moved so quick. Sorry about that. Came back up here, gave everyone the opportunity to get in where they wanted to get in. They're important clients and this person and that person. And now, possibly, not that we know, possibly it's done its work now and it's ready to go. Or maybe it hasn't done its work, and because look, what did we identify? We identified above here this additional little bit of imbalance that's just sitting in there. So maybe it isn't done. Maybe it's like, you know what? True, I'm here anyway. I better go collect my money from everybody. Yeah? I better go and close these imbalances from everywhere. I can see that's close. Obviously, you don't want to go and drive all the way to the other side of town, but you're in the area anyway. Let me go and collect my money from GVAN. So we don't know. So at the moment, what would I do? I'm asking that question. Is the market closing above this yellow line? Is it closing below this yellow? If it comes up here and breaks this yellow line, I'm going to be watching to see if it does this. Just comes into here, closes imbalance, and then starts breaking structure. Or is it going to come up in here, close this imbalance, make a correction, and then continue? That's what I'm going to be watching for. And vice versa. When it comes down here, I'm watching for the opposite. So right now, what I could do is I could simply say, okay, this market is making a bit of a, it's kind of, if we want to go there at the moment, trading within this yellow range, you know, I was going to say something else, but let me not. All right. I can draw my lines in like so. Have a look at my line. Jay, but why have you drawn your line like this? I just don't understand how you draw your trend lines, because I must touch the last low. Whoops. The last low before the highest point. So therefore, at the moment, we're trading within this range. Oh my goodness. Does it make sense or does it make sense? It makes sense. So I want to see right now, are we going to start doing something else? Now that this imbalance over here is closed, that we just spoke about, is this market now going to start doing something else? Or is it going to say, no, Jay? Yeah, I did want to collect that money there, but you know, there's big money waiting for me over here. Man owes me more money over here. Is he going to do this? Is he going to do this? Is he going to continue trading within that range? I don't know. I can read and react to what the market is doing on whatever time frame that I'm looking at it. Okay, so right now what I'm going to do, just for argument's sake, I'm going to place an alert. These are going to be my AIs. I right click, I add an alert. All right, crossing down. I want to know when it starts to cross down, and I can put whatever information I want to put in here. I can't be bothered right now. All right, and we're going to hit that button, and I've got an alert in here, and now I'm also going to place an alert above this level, and I can place it above it, or I can even place it on this line. By highlighting the line, right-clicking it, look, add alert on horizontal ray. All right, no problem, let's do that. When it crosses up. Now I've got my eyes and my ears, yeah, that are watching the market now to see what I want. I can go about my business now. Because when those things happen, I'm going to get an audible alert, as well as an email, and as well as a possible text message, and as well as a possible notification on the app. And then I can come and go, okay, we're breaking down. Cool. And I can make some decisions. The decisions I make could be, am I going to get in this trade early here as I see a breaking structure indication correction? Am I going to get in aggressively here with my stop just above the last low, which is a very aggressive entry and a very high probability that I can get stopped out? Am I going to get in this trade and place my stop above this more swing high of this smaller range? Yeah. Am I going to wait? Because we're so close to this bigger picture break of continuation, because we said this was the indication, we said this was the correction. I'm so close to this bigger picture, you know, break and continuation. Maybe I wait for that to happen and see that indication, correction, continuation on a smaller time frame, and then I get in over here very aggressively. Maybe I get in over here over my last low, a high, sorry, or a lot safer trade above a swing high. I've got these options. But the bottom line is that I'm waiting for the confirmation. Yeah, I'm waiting for and I'm telling you guys, I'd prefer that initially you understand this strategy and you start taking these trades very conservatively on the basis that you're saying, you know what, Jay, I took it and I placed my stop above the swing high every time. Another educator is going to say to you that they only place their stops above the swing high. And I would agree with, I would say, you know what, cool, I get it. Your stops really should only go above swing highs. That's the safest place. What do I mean by swing highs? I mean that when we see this structure doing this, all right, and then we start seeing, for argument's sake, the market come and break structure, indication, correction, continuation, you know, someone's going to turn around and say that your stop must only ever go here above that swing high. On the basis that would be that you're taking it to a swing low level. And where would that swing low level? Let me draw it backwards so you can understand what I mean by that. And I'm drawing it backwards. All right, so bear with me. Yeah, on the basis that you're taking this trade at least down to that swing low level. It's only a 1-to-1, but it's a lot safer 1-to-1, okay, than you turning around and saying, I'm going to get in aggressively below that last high. Now, the reason why I teach you both ways is because I'm showing you sometimes you're not going to have the opportunity to place, it's not going to be feasible for you to place your trade, your stop all the way up here. Yeah, okay? And therefore, you should completely be leaving that trade alone. And that might hamper the fact of you being, especially in your learning phase, to be able to take trades. I'm trying to say to you this, understanding that there is this entry and there is this entry means you're getting a deeper level of education. Understanding that you can manage your risk here, and if you get stopped out here, you can still get back in when you see that break of structure somewhere up in here, because this market, for whatever reason, wanted to kick back deeper, not break this structure, but wanted to kick back deeper. You say, okay, cool, no problem. I took a small L, and let me tell you something. This is. I want you guys to say this. This is what we used to. This is what somebody taught me once upon a time. And it's something that I think you should, maybe type out and put above your, your table or your board or wherever it may be. You ready for it? Here we go. And we're all gonna read it out together. You ready? Is that how you spell losses? I think so. Have I missed the S? Where's our spelling people then? Have I missed the S of losses? Let's check. Let me check.
I think that's how you spell it still.
ChatGPT, WhatsApp, between all them kind of things there, I don't know, my spelling's got out the window, I'm not gonna lie to you, all right? Let's go. There you go, all right? I thought maybe that missed the S. Can you see it? I was taught, like they had a classroom, people, repeating this over and over and over and over again. They had like a cult. I love small losses. I love small losses. Because you're going to be in the game of, there's going to be losses. So take your pick. Do you want small losses or do you want big losses? I love small losses. Small losses means that I understood what was going on and positioned myself correctly. I love small losses. If I take a small loss because I've managed my risk, maybe I understood that this is a bit of a higher risk trade, and instead of being in there at 1%, maybe I was in there at 0.5%. Instead of being in there at 1%, oops, Who knows what just happened? Instead of it being in there at 1%, maybe I thought to myself, you know what? This is a bit of a, what's going on here? My screen's just gone mad. Yeah, maybe I thought to myself, you know what? It's a bit more of a higher risk trade. Maybe I'll get in 100%. Maybe, baby. Maybe I'm comfortable with 1%. Maybe I'm in front of my computer. So therefore, if I take this 1% loss, it's acceptable for me. Yeah. And I'm taking 2 trades for the day. And when this market breaks the structure over here, I'm going to get in again for my 1%. All right. And I'm going to recoup all of these losses by the time I even get back to this market structure. And I'm going to make an additional, 2%. But you should love small losses. If you think you're going to be out in this trading game and you're not going to take L's, you're wrong. You're super wrong. All right? All right, cool. I love small losses. Go, Hattons, get your big chain saying, I love small losses. All right? So we're in here. We're seeing what this structure does. I've got my alerts in. Is there any questions anybody has about this GU market at the moment?
I was going to say, you see where you just put your two, your short position and your long, 2 short positions, yeah? Can you hear me?
Yeah, I'm here with you, sorry.
Yeah, I was going to say, you said something a while ago, you said something about like mitigating your risk, but I was saying, you see where you drew the arrows, yeah, to kind of show the direction of the market? You wouldn't really, we would wait for some sort of indication and correction before you even enter there, isn't it?
All the time.
Yeah.
My indicate. Go on.
I was gonna say, because that looks like it's at the top of the range right now with just the little arrows that you draw. Like, look to the right. Yeah, you see where that is. Which one are we
talking about? We're talking about this diagram that I'm doing, or the actual trading you're talking about?
I'm talking about the diagram. We saying the diagram don't represent nothing then with the real market. Then. That's just
obviously it's just me scribbling it down. But I'm trying to understand what you're saying. So I'm trying to understand what you're saying.
If it ain't got to do with the real market, it's fine. I thought that was representing something else.
No, it is representing the real markets. Definitely, it's just a scribble. So I'm just trying to understand what you said, what you mean. Because I can't remember how.
No, I think I've got the clarity in me just saying, to be honest.
No. To be fair, what you're saying is correct, because here, the way I've drawn this, because I just scribbled it, is a little bit it's a little bit confusing, but let me put it in the bigger picture. Okay. The bigger picture, because we understand the Russian doll, is like this.
Yeah.
This is the bigger picture.
Yeah. We're talking about the overall market right now.
Exactly. This is the bigger picture. Okay. So on that basis, if I was to draw in some lines in here on this bigger picture, yes, we are at the top of the range, and ultimately we're interested in selling from that top of the range. And therefore, when we see a break in structure from the top of this range, making an indication, correction, and continuation, we have the ability to enter that trade, placing our stop either aggressively above the last high or conservatively above the swing high over here. So that makes more sense now compared to the way I drew it previously.
Yeah, that's what I was trying to understand. So you're saying the one on the left is from the last high, and the more safer trade is putting your stop loss above the last swing high.
Exactly. Because look, on a smaller time frame, look, this is still going to be a swing high on a small. Look, let me draw a little line in here. If I start to do this, good question as well. All right. So if I started to do this, that smaller high of that first trade position, this one here, is kind of above a swing high, but of this smaller energy. But I'm just saying to you, it's very, very possible that when this structure was broken like this, that there was some imbalances left in here. It's very, very possible. Do you understand what I'm saying? It's very, very possible that as that structure came and decided that it wanted to go and do something, it left some imbalances in here. So therefore, even though I saw it indicate, boom, break the structure, correct, and then close here, this market could start going in my direction and go, oh, by the way, damn, I forgot. GVAN owes me some money, and come back up in here, and then go. So therefore, this is the safer place to place my stop, and this is the more aggressive place to place my stop. This stop being here, if I put a red line in, it's here, means that if this market goes above here, it's telling you that it's doing something else. It's like when you get stopped out here, you don't really know the market's doing something else. The market is still coming down. It's just that you placed your stop in a bit of an area that was a little bit too tight. Do you get what I'm saying? Like if I place my stop here, the market is still ultimately on a bigger picture making lower lows. And then if it even became all the way up here, this is a lower high. And then it's going to go make a lower low. So therefore, by placing a stop over here, the market made a lower low, and it came all the way up here and made a higher high. Well, that's a madness. It's doing something mad. Like it's doing something different to what I thought it was going to go and do. So this little stop in between here, this smaller stop, is an aggressive entry, but it doesn't necessarily tell you that the market is not doing what you think it is. Like you're going to get stopped out here, and the market's going to actually do what you thought it was going to do. You're going to get stopped out here on this first trade, and then later on look at it, and this is going to be in hell. It's going to be down here. And you're going to be like, oh my God, I told you, I knew I was going to get that trade. And you're going to be doing that. Not because you was wrong, just because your stop was a bit tight. Now, I'm not trying to say that you can't take this trade, because the same way I'm saying that is the trade from here, after you take this aggressive entry, goes to hell and makes you 3 times as much more money because the risk was smaller. I'm just saying. Just like with everything in life, there is a slightly different risk parameter if you placing your stop above this high than you placing your stop above this swing high on a higher time frame. Does that make sense?
Yeah, makes complete sense.
There you go. That's all I wanted to do, is to make sense, guys. From time it makes sense, then it's for you to start seeing it in the market. Like, oh, damn, this is the situation that we was talking about the other day. Listen, I just want to get some wins up right now. You know, I want to get my win ratio, get my confidence up. I want to place my stop above here. And that means that your trade for the whole day might do this. Look, might come down here, get profitable, and then it might going backwards. You might end the day in the red. And then you're like, oh gosh, you're all depressed, going to bed. Trust me, that's how you're going to feel. Yeah. And then tomorrow you wake up and then you start seeing the market doing this, and you're like, rah, I'm good. Because you took the larger time, because I don't know whether this market right now, as it indicates correct, is this going to rock and roll and go to hell? I don't know. We haven't even looked at the news. For all we know, there's some crazy news happening today. Yeah? For all we know, there was some crazy stuff happening. Look, FOMC minutes happening today, 7 o'clock this evening, which is more than enough reason for this market to just do the damn hokey cokey. You see it? This is why we look at all of these factors, because somebody out there doesn't even look at the economic calendar. And then when his trade's doing nothing for the whole day, just going sideways, he's like, oh, what's going on? I don't know what's going on in the markets. Well, I know what's going on. It's FOMC at 7 o'clock. That's why the market's been going sideways. So this is the breadth, the width, the depth of the education that man are trying to teach. So that when you're there and somebody's saying to you, yeah, how's your trade doing? And you're like, it's not really doing anything. They go, we talking about? I thought you said it's going to go. You can turn and say, it's FOMC today. If this market don't break structure before FOMC, I'm just going to close this trade. And they're going to go, what's FOMC? And you're going to say, it's an economic event, yeah, whereby you're going to click in here and you're going to get all the information you need. The Board of Governors of the Federal Reserve and the Federal Open Market, the FOMC, have equal authority to set interest rates in the United States. After receiving recommendations from one or more of the regional Federal Reserve banks, the board makes a decision on discount rate modifications. The FOMC makes decisions on open market activities, such as central bank money levels and the federal fund market rate. And they're going to look at you like you are a genius. They're going to say, where are you learning this stuff? They're going to say, unity to be free every morning with the family, with the villagers. That's where I'm learning. They're going to say, rah, bro. But it's not that raw. It's just you don't know what you don't know. You don't know what you don't know. But now, luckily, everybody on this call and the rest of the family members that I'm not on this call, now you know. You know? Now you know why certain things are happening in the world. Yeah, we know why certain things are happening. And guys, you can get deep on this if you're on a fundamental level. There's going to be people out here turning around and say, well, I know why it was in America's interest to go to war. Because from the financials, we can see what their angle is. You're going to look at oil and you're going to say, whoa, look, based upon what's going on in the markets in oil, now I know why these guys were so eager to say, yeah, I think we're going to go and we're going to help out, over there and, clear that land. You're going to start seeing other reasons, other things that color the picture. Like, okay, from a financial perspective, I get it. Have you ever seen one of your brethren moving a bit mad? It's moving a bit mad. Like, why is he acting like that? Yeah, I said I'm gonna give him the money, or all he had to do is wait for my man to go. But he's acting a bit strange. If you could look into his technicals of his financials, you go, oh, that's why Jermaine's acting like that. Because from a financial perspective, he's on his face. He's just broke structure, bearish. So that's why he's acting like that. It gives you more information of life, of what's going on in the world. You see it? So it's the same principle that's happening right here, guys. And it's everything that we can see here in these markets and these understandings. The way I'm trying to educate and the way I'm trying to teach is about you being sustainable, you learning something that you are going to be able to take elsewhere. But the reality is this, guy, why it could be very, very possible that Jivan in 2, 5, how many years is turning around and saying that, yeah, he's the head of this financial, or he set up this family office or this fund, or he's heading a trade desk on the basis of the education that man are learning here. Not on the basis that man showed you how to use a signal and make a little money out of your £500 that you was able to make, a £32 here at £18. That's not helping you. You're gonna blow through that money in a bad day. But this education, nobody can ever take it away from you. Let me say that again because somebody didn't feel that one. I'm gonna say it one more time. The education that you have learned today and over the previous months and years, nobody, not me, not the tax man, not your ex-partner, nobody can take it away from you. It's yours forever. So I know which one I'd prefer. Because with the education, you're supposed to be able to apply the education and do something with it. I like to think that even though I'm at the start of my journey, that I am doing something with my education that can have ripple effects, ramifications far beyond my own abilities. Because even on this call right now, duration of this call, I have instilled my knowledge of what I have to others that can take that and not just trade, but do something else with it. That gives me vocation. That makes me all warm and fuzzy when I go to bed, knowing that Jivan's like, yeah, bro, I kind of get it. Well, I've been looking around. Go on, my bro. What are you saying?
Nah, I'm just agreeing.
Yeah. I've been looking around. He's been looking around for education. Nothing weren't resonating. It was all a bit confusing. And now he's finally getting it. Yeah, maybe that doesn't help him today to buy his Lamborghini. But let me tell you something. It's not how much you make. It's how much you keep. We all got uncles that once upon a time back in the day, they got pictures on the wall when they had the new thing, the new Porsche. Where is it now? It is not where you are in life. It is where you are going that is the most important factor. It's not where you are right now. Look at the media. I'm just talking about the media, people that you know, where they were in their life to where they are going. Go ask R. Kelly. Go ask P. Diddy. I'm just talking about bait media people. Go ask people that were once upon a time they had X amount of money. Your people like that. We know them. We can reel them off. I'm not a man to kick a man when they're going through something. But I'm just saying to you, it's not where you are in life. It's where you're going. So if you are right now here, grafting in the trenches to try and learn, when you get that education that no one can take you, where is it that you're going with that? I say to the moon. I say the sky's the limit. All right, so yeah, so that's where we are with this, and I've placed my alerts in here to see what's going on. And at the moment, the market hasn't told me anything. And now, because I know now also that there is FOMC minutes, guys. If you ever wondered about what these little things are down here in your trading view, well, it's showing you news events. Look, FOMC minutes. Yeah, at 7 o'clock. There you go. Yeah, there's one behind this. What's this one? It's a little zigzag. What does that mean? Latest updates. Yeah, dollar tracks global yield lower as Fed minutes awaited. Look, it's telling you. They're waiting. People are waiting to see what's going to happen with these Fed minutes. Yeah, dollar dips, China boosts global growth hopes. It's telling you, it's giving you a little insight. Yeah, that you can then, if you want to, go and do your own research. All right, there's no excuse now, guys. You see, right now in this day and age when we've got a supercomputer in our pockets, there's no excuse. You see me. Do you think I need to spell losses correctly? I don't care. Say a spelling a class every morning, but I've got a supercomputer there. Let me just go and see and make sure that I haven't that I'm not missing an S, because now I know. And now I know for next time. I've just learned something. Using this supercomputer, I just got and ask. Now I know. You don't know what FOMC is? Go and ask. Go and find out. You need further information? Go YouTube. Watch a YouTube breakdown about FOMC. I guarantee you, if I put what is FOMC in YouTube, some guy who's done a whole 20-minute video about what FOMC is. Yeah? Some guy has. There you go. This guy's got glasses. He's got a part in. He's got grey hair. Yeah, he looks like he knows what he's talking about. Let's have a listen. Yeah?
You said the glasses make him official.
Exactly. You know, when as soon as the camera finishes, he takes off his glasses and puts on his new era cap and then walks off. Yeah? But when the camera's rolling, he's got the glasses. Yeah? Watch him now. So there you go. That's how I'm going to get that extra education. And I'm going to then, once I've got that education, nobody can take that away from me. It's mine forever. So when your bridge was like, oh man was saying there's some funk. And you say funk, what are you talking about? Yeah, man, there's some funk thing happening. You talk about FOMC. He goes, yeah, funk. So no, it's not funk. It's FOMC. And you're going to say to him, and you're going to explain to him what FOMC is, and he's going to look at you like you're an alien because of the knowledge that you've learned that nobody can ever take away from you guys. And too much I'm seeing with these groups and these, just come here and, our indicator is going to do this. That's not teaching you nothing. You're not learning nothing. In fact, you're putting yourself in a situation whereby that thing can be taken away from you. Yeah? You don't want that. It's not going to help your last name. It's not going to help your kids. It's not going to help the people around you. Yeah? All right. So, any other questions? I mean, great that I heard from Jivan. It's great that I heard from Darren. Any other thing? Obviously, we've got some veterans on a call. If I'm going to ask Alan if he can, yeah, just to give you a little bit, if he can, a little insight into, the pains that he's experienced in his trading and the things that he's trying to get better at in his trading. If he can, I don't know if he can.
Yeah, Grand Rising all. Yeah, I'm in my home office. Yeah, so I can talk. Got no meetings today. For me, about a couple of years ago, I passed the first stage of the FTMO. I say 2 years ago because it was just after the war started. I think the war's 2 years now. 2 years we've been this war in Ukraine. And for me, I didn't pass the second stage because of psychology. Yeah. When you pass the first stage, yeah, great. Listen, you can't be married to it. I've learned, don't marry, no emotion. Yeah. This thing is a no emotion business. Yeah. Right. It's strictly business. And I've learned that in the last few years, and that I've gone through the pain of it. I've blown accounts, and understood why I've blown accounts as I go over it. I screenshot it, I go over the trade, I've got folders of different pairs that I screenshot when I take a trade or lose a trade and I go over it. So I kind of try to understand why I got into it, why I lost or why I won a trade. And for me, it's been a psychological problem where, it's the let the emotions get hold of you. Now I've learned no emotions, no nothing. You know, you got to be like 007 with this this trading business, you know, because it is a business, and also it does teach you a lesson if you stay in. Basically, I've learned if you take too many trades, you're going to lose. Yeah, you know, end of the day, take just enough trades that you need that, you know, you become profitable. You know, you do your 1% a day and that's it. Yeah. Go on to, if you want to trade more, go have another trading account, which is just a trading account that is a demo, and just go over and test yourself. So there's a number of things I've learned, you know. It's the psychology thing that it's a battle with yourself, and it's a constant battle with yourself. There's sometimes you want to jump on, you want to trade, you know, and there's sometimes, you know what, I just want to get on there. Yeah. So you've got to say, you know what, no, not today. I'm not up to it. You know, my mind's not in the right place. So for me, you know, I know a lot about trading now with Jay's tutelage, you know, being on the calls, and I've done other stuff as well. I go over other bits and pieces, other people. I understand how it works. Yeah, I understand the draw to liquidity. Yeah, I understand there's, you know, the orders and the buy stops and sell stops and so on and so forth. However, you've just got to master your psychology. I think that's one of the most important things, you know, and that is the majority of trading is your psychology. And that's the thing I'm trying to master every day. You know, it's every day. It's not you've done it, it's every day, because something else comes every day. You know, you get something else in your life, and also you get something else in trading where you got some news and you want to jump in. But as Jay always says, you wait and react. So yeah, that my journey has been, you know, the last few years, you know, it's been up and down. However, for me, it's the psychology, mastering myself on that respect. Don't let the emotions get hold of you. Be emotionless when it comes to trading. Be focused. When I'm focused, I'm a brilliant trader. Yeah, right? Brilliant trader. When I'm focused. Now, listen, I don't take many losses when I'm focused, yeah, because I take the right trades. Yeah. Right. But when I'm not focused and I'm, you know, going different places, then I'm like, yeah, you know, you're not concentrating 100%. I'm not a great trader, you know. So that's me.
I'd like to say thank you very much for that. I think we should all say thank you for the honest and open, you know, description of where he is with his trading and what's going on. And like I said to you guys, you see what we're doing every single morning, and we are going to do a lot more work on psychology stuff, because I said this is just that chapter. The psychology thing is big, and to be perfectly honest, it's like this. What Alan knows is that he knows the value of being able to become a great trader, because someone's going to turn and say, well, 2 years ago you bought CM4MC and now you're not driving around in a Lamborghini. Well, this doesn't work like that, does it? Because, I mean, how many people do you know, for example, that have been doing business for the last 10, 15 years, 20 years? You don't go to your barber shop and be like, bro, you've been doing barbering for however long. How come? Like, it doesn't work like that. It's about improvement and understanding certain things. And the psychology side of things is magnificently powerful. It's magnificently important, because as Alan said, life is life in, yo. So what happens if he gets on the charts when he's just going through bad patch with his missus? He said when he's concentrating, he said when he concentrates, he said it with chest. He said when he concentrates, he is a brilliant trader. Said it with his chest. But he said when he's off, the psychology can be off. And this is the point of trading and the point of being able to master certain things. Now, we can do certain things, have certain mechanisms, have certain practices that we do to try and eliminate and try to counteract the psychology. But let me say something to you about it. It's human. And unless somebody here on the call is not human, it's always going to exist. Yeah, you see some of the best. Go on YouTube, see some of these trades, not the ones that are selling courses and make out that they got 100% success rate. Go look at them, man. See the man that we just see with the glasses thick, and he'll tell around and say to you, yeah, you know, had a bad year this year. So wait a minute, whoa. You're a professional trader. You trade for Goldman Sachs. You manage a portfolio of 100 million, and you had a bad year this year. Yes, he had a bad year this year. He's been trading for 25 years, 30 years. He's got the grey hair with the parting with the glasses. So why do you think that you're not going to experience that? The issue is not the fact of, like I said, where you are, it's where you're going. Because if next year he says, well, you know, and a really good year. All the losses from last year, I got that back plus some. But then, who cares? Who cares about his bad year? Who cares about all the shots that Michael Jordan missed? Nobody cares. Who cares about all the shots that Ronaldo missed? Nobody cares. But the psychology is, are you tough enough to stick at it? Are you going to be that guy that's be like, oh, bro, man, you're not in the first team, bro, so you might as well allow this football team. You've been playing in the second team for ages. Just forget about it. Are you going to be that person that crumbles? Because Mbappe, he didn't get in the team straight away. Got air when he tried to get to, where is it, Chelsea or wherever he was trying to go. Got air, didn't sign him. So the psychology is understanding, like Alan was saying, what are your strengths? What are your weaknesses? When should you not trade? I don't know when G-Van shouldn't not trade. I don't know. He's going to know. He's going to know if he went out the night before and he had a drink. Every time he does that, he comes in front of the charts the next morning, he just does a madness. So you know what I'd advise? G-Van, if you've had a drink the night before, don't touch your trades. Don't touch your computer. You know that if you're in a good space, maybe physically, maybe you've gone for a jog. Maybe in the morning you got to go for a jog, get that fresh air in your face, and that helps you to be very clear of thought.
Just have a routine.
Have a routine. But the point I'm making to you is like, it's near impossible for me or anybody to give you, no, I'm not going to say near impossible. I can give you some loose structure of things that we should do. One of them is waking up every single morning, 6 o'clock, 7 o'clock in the morning, and sitting down and activating our brain and looking at these charts. It's one. And you're already professional at doing that. Up every single morning, even if you're driving, getting that education. But the point is that a bespoke routine, really zooming in on your issues, is going to come from you. I don't know if you've had an argument with your missus. I don't. But if you've clocked every time you've had an argument with your missus, those are losing days where you lose heavy. Take heavy losses. Or you was over trading that day. You got stopped out, you just got back in. Stopped out. Just got back in with a tear in your eye, lump in your throat. I hate that gal anyway. She's chatting rubbish. I'm going to get a new gal. I'm going to get a new family. And you just keep hitting the buy button and the sell button like that. But then you can't trade when you're in arguments with your partner. Guys, I keep turning around. I've spoken to you a few times about, look at the time. Wow. I've spoken to you a few times about a film, a series called Billions. And I advise you watch it. I advise you watch it. I might try and even see if there's an episode we can watch or something like that. This program here is about a trading, about trading. They trade investors, obviously making billions. This is Axel Rudd, the lead character. But let me show you somebody in here. This woman here, she is their in-house psychiatrist. Or maybe she calls herself something else, a coach or whatever maybe. Where these guys will come into the office and, they'll see someone not performing or someone's feeling a certain way, or man just sit down on the couch like, yeah, man, I'm having inadequacy issues. I can't pull the trade. And she talks them through it. She helps them with their psychology. She helps the main man, Axel. Arguably, if she didn't exist, he wouldn't be the man. She's just as important as him. So this is a metaphor for your psychology. We've got this woman over here, the bull-headed one. Let me try and find a better picture. One that's big. Let me just do this one. Yeah, we've got a woman in there, and she is they call it a quant, I think they call it, yeah? This one here. She's all about algorithms, and she's a genius with the numbers. Yeah, we've got this guy here, which is the man that he's his right-hand man, keeps Axel Rudd accountable, but also is his soldier, does what needs to be told, does what needs to be done. That's that person turning around and being like, nah, bro, can't do that. Why did you get in the trade? Yeah, I'm saying, to the point I'm making to you is this is a program about traders. about people who understand market structure, price action, understand what fundamentals do to stocks, what fundamental issues. You see incidences happening when these guys are a little bit, criminal acts that they want to invest in a company, but they want it to go to hell first. And they've actually gone and poisoned the drink, of a launch of a company's drink. They've gone and poisoned the drink where everyone started throwing up on the basis that, if that's their launch, the stock's going to go to hell. If you're saying you're a drinks company and everyone's drinking and then they're throwing up. Yeah, it's a very interesting program, but I'm telling you, see all of these programs, and you can go into your Googles once again, with an S, and you can go and you can look at top trading films. Yeah. And when you watch these films, let's go over here. When you watch your margin calls, your Inside Job, your Wall Street, your Big Short, your Too Big to Fall, all of these films, you are going to be watching them with a complete different energy because you understand the markets now. You understand what was happening when this guy, Wolf of Wall Street, realized that he could go and sell these penny stocks mad cheap. You understand what I'm saying, yeah? Buy them mad cheap and sell them to people expensive. And that's how he made his money, how he got out of the dirt. Because he's like, wait a minute, what? You're buying these for how much? You're making how much commission on each one of these? They're making this. Okay, no problem. Because now you have a better insight into the markets for yourself to be able to go and be successful, etc. Boiler Room, all great films. I'll tell you what I'm going to do, guys. Good morning. Good morning. Good morning. God bless. I've seen the time. And no wonder my phone's been ringing off. All right. I'm so grateful and happy that you're here to share this Breakfast Club and to be here in the family. All right. Every morning I'm going to give my gratitude. All right. I'm going to play some iconic Wolf of Wall Street clips to give you that energy. Let me say trading clips. Trading scenes. Yeah. And I'm going to wish you guys an absolutely fantastic day. I'm going to find some iconic trading scenes. Oh, I want more than one. I want a compilation. Margin call, senior partners. I want a compilation of all of them. I'm going to find there we go. I think I thought so. I'm going to find a really good one. All right. Compilation of all of these great trading scenes.
And you're going to type compilation in.
Yeah, there you go. He was with me.
Type in best trading movie scenes.
You're right. Best
trading movie scene, yeah. It's not even that.
We'll find some. I'm going to put it on right now anyway. I'm going to slap in this one here, which is an iconic scene. And I'm going to wish you guys an absolutely fantastic morning. Yeah. Thank you very much for being here. Thank you very much for staying the course. I understand whatever amount of time you put into this trading, it takes you 1 year, 2 years, 3 years, 4 years, 5 years, 6 years, 7 years, 8 years, 9 years, 10 years. It will be worth it. Yeah. Because if people go to school for longer, for 40, 50,000 pounds worth of debt and come out of school and can't get a job, can't make £1, end up working in the library. But when you learn this skill, you're not only going to change your life, you're going to change the people around you's life, okay? Because that education, I'm going to play this one next. That education is going to be yours forever, all right? Guys, good morning. Good morning. God bless. For the people that have been at home, watching this on YouTube, guys, do like, share, subscribe, try and watch the videos back, whatever it may be. And, don't be afraid to reach out to me if you've got a question or whatever it may be. But guys, good morning. God bless.